The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to the Power Trading Hour with me, your humble, lovable, and very happy host. Happy because we put an end to that horrible music that they play before my show. No one should have to endure that, should they? Anyway, as always, we come together at this time, and that time is...
The following takes place between 2 p.m. and 3 p.m.
every day. Anyway, as we start off the show, we're off 15 points on the S&P cash, volume at about 2.6 billion shares. So somewhere about where we started off yesterday, maybe a little bit more. We went to a low of 2026 on the S&P cash. I suspect we're putting in some kind of low, at least for the next week, maybe 2 weeks. I think we're probably in a bigger trading range, but without a lot of new earnings to blow the place up, we're pretty much done with them now. This week, of course, and in today, we saw all the stocks that were getting slammed in the retail sector. So we've kind of had the trifecta, hat trick of sectors that have done very poorly. Of course, led by a handful of stocks that have done very well. And does that remind us of anything? Kind of thinking. Anyway, I've got a excellent edition of I Told You Thusly coming. And I guess we just need to kick this show off.
That it's all just a little bit of history repeating.
On this day in 1998, the internet gold rush is in full swing. The Globe.com goes public, shooting from its initial price of $9 a share to as high as $97 before closing at $63. And then the record day first gain of 606%. And what else is there? Although the Globe has lost $15 million on just $2.7 million in revenues in 1998. Investors value the stock at more than $990 million on the first day, giving it the 24-year-old co-founders, Stefan Petronak and Todd Kriselman, a combined net worth of $151 million. And that's in $1990. That's talking something. Within 2 years, the stock will shrivel, just like some things on our engineer at TFNN's body, to 50 cents a share. And it's delisted from the NASDAQ on trading on April 23rd, 2001. I don't know what else to say on that. Oh, well, that's pretty much it. But I keep on thinking that we are very much like this. And there's a handful of stocks here in the United States that are kind of like this. But we're going to get into Chinese stocks. So we'll start that. Anyway, is David projecting anything? I don't know. It's just, I tell you what, sometimes you turn music on and you just, you would rather slide down a 30-foot razor blade into a pool of alcohol than listen to it. It's just me. I can't stand it. Not for a minute, not for a second. I said, nay, never again shall this kind of travesty be put upon our listeners. Today, of course, a lot of people have emailed me and asked me where I come down on the red cup. Well, if you are somebody like Weird Al Yankovic, he's been passing around the red cup with a Hail Satan hand cover on it. I don't think that Starbucks is actually handing those out, but boy, do I want to get one and put one on to go to Starbucks. I go there about maybe 3-4 times a year. Never was a big coffee drinker. I love the smell of it. The taste of it, never too good for me, at least regular coffee or what my parents drank. So never really got in it. Always tasted like dirty water to me. But Starbucks, if you put enough vanilla in it and enough whipped cream on it, and it just smells good. But never a big coffee drinker. But boy, if I could get Weird Al Yankovic to give me that coffee cover, I would. But I think this is probably going to continue on for the one and only Starbucks. Some people hail it as, of course, a big deal. I do not. Now back into exactly what we talked about at the beginning of the show, and that is I informed you thusly. Several months ago, we played some audio clips. I'm going to play them again for our new listeners here today. But it does and continues to set up a theme that we've been talking about for a while. Of course, Bishop Holdings is off about 25% today. And in those initial clips, we talked about exactly how troublesome this company is, but literally every company in China. Now, of course, I'm not one to belittle the Chinese.
I like Chinese. I like Chinese.
Yes, I like them. Unfortunately, we're letting them get away with murder, and that murder is their books can say anything that they want. And let's go back to the initial clips. And this is, I forget his real name. I call him Herman Munster. His last name is Munster. And somehow, oddly, he lives on 1313 Mockingbird Lane. But he's an analyst that goes on CNBC all the time. But he had this to say.
Has that crossed your mind?
Absolutely.
Okay.
That has. It crossed my mind with all my Chinese companies, and more with the Chinese companies than with the U.S. companies. And I think when you're dealing with this, there's a 5% chance I'm dead wrong, and this could be nuclear. But I don't think that that's the case.
But shouldn't the stock trade at a discount if there's a 5% chance that it's a zero? I mean, shouldn't the SEC, there should be a regulator. There's one regulator for these companies. It's the SEC. And the SEC has no ability to call the country of China.
And the other gentleman on there is John Fitchhorn, who is short VIPs. Later on in that conversation, as we go back 2 or 3 months, is this.
You know, this is probably a first.
No, that one actually is from today. Did I play this one already?
Has that crossed your mind?
Absolutely.
Okay.
Now, we played that
crossed
one.
my mind with all my Chinese companies. And
I can't get everything going right here. Here's the second one.
Are their revenues $350 million, or are they $3.7 billion? Which is it? Are they making $122 million, or are they losing $2.1 million? This can't be the same company. You must have pulled the wrong filings. But
anyway, that was probably one of the best 15 minutes I've seen on financial infotainment TV. Normally, not a lot of deep thought in a lot of this stuff. It's all from the hip. But always very interesting to see it. Yesterday, saw some comments in the den about a short seller, or not a short seller. It was actually Herb Greenberg talking about how he never met a stock that he liked. The answer is he does financial analysts work on it, and if the stock doesn't have any problems with it, it's not a whole lot for him to work with, but and do. I mean, his whole point there is to do the job that a lot of other people don't do, and that is dig deep into the financials and find those issues. Of course, this is off 25%, and this is just off on the fact that they're saying that their earnings are lower. This doesn't even get into the whole issue of fraud.
You know, this is probably a first in a couple of regards. It's probably the first company to pre-announce earnings to the downside after already announcing their earnings date, and doing so 43 days after the quarter has ended. So you bring up a good point. Like, if it's a fraud, do they not even have enough control over their fake numbers to know what they were going to be when the quarter ended? I mean, I don't have a good answer for you then. But it's also probably the first internet company, depending on, you know, mobile buyers, that has pre-announced earnings because of bad weather.
right.
Now, some of the other comments he gets on to later is something, and one of the reasons I called this outfit, but it is called the PCAOB, and it is, of course, the Public Company Accounting Oversight Board. if you're not familiar with this, the Congress basically set this up. I think this was one of the fallouts of the 1929 crash. And they set this up to actually to oversee, and get this closely, oversee audits of broker dealers and the companies that publicly report. But guess what? They can't do anything overseas. So there's my double entendre there. That is that they oversee stuff, but they can do absolutely nothing in China. We've talked about this issue before, and it continues to be a horrible, horrible thing that people think that maybe because it's listed on the New York Stock Exchange or listed on the NASDAQ, that these stocks are worth a penny. Since we have no way of going in and asking any question or checking anything out, and every question is basically like asking a politician what the meaning of is, we get absolutely nothing. Anyway, I've called these folks, and they've said that they were going to try to get somebody on, and emailed them again today. But they're going to tell us exactly what auditors do and what they don't do for these companies. But of course, most of these companies, especially VIPs, other Chinese companies, most of these things have only been around a year or therefore, a little bit. But like yesterday, Herm Greenberg said that why these things kind of started off wonderfully, they really got in, or someone got to them and started doing this stuff that's called, where's it at here? Variable interest entity accounting, which basically is smoke and mirrors. You don't really know what you're getting. You don't know what's happening. And yeah, I don't know what else we should say other than that. I want to get to my charts. So I have to get rid of this for a second to bring up my charts. And then I'll move this back over here so I don't have to do that again. And we'll take a look at VIPs. Now, the thing is that there are 100 or 200 companies just like this one. And I don't know what else you can say. We're breaking the lows that happened pretty much, I think, off those big 2-month ago deals on CNBC. But it was pretty easy to figure out. I tried to short the stock and actually called, and they want a $5 premium when it was at 20 bucks. So there isn't a great deal of these shares to be shorted. So you can't make money. But at the same time, probably a good idea. And normally where there is smoke, there is fire. And of course, in the stock market, there's the thing called the cockroach theory. You see one, there's probably more. That's why we see the biotech company over the last few weeks getting so beat up. And the same thing for this. But this is the warning shot that all you have to do is say boo about earnings, and these stocks fall in half. We'll be back after this short message.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And other stocks of interest. Anyway, we talked about Bishop. Just a tidal wave of stocks out here getting slammed. Take a quick look at them. A lot of these stocks were stocks that I tried to go short and did, and sometimes made a little money off of them. But everybody was so short that actually either hanging on to the short through short squeezes was tough. But these stocks for a long time were actually showing the kind of weakness that it had. We tried to short Fossil. Made a little bit money on it. This thing is not the first time it's been slammed. Again, today on poor earnings, what is it? But it's probably interesting to know that there is the last buggy whip company in the world, and I guess you can buy expensive flash watches. Fossil, of course, makes those swatches and a lot of the movements for other less expensive watches. Of course, now everybody has their own smartphone and they don't need to carry a watch and don't wear one, except if they want to show some kind of status. It's like a ring. Probably still watching their iPhones for the time. But at some point, there's always that breaking point. I think that there's a few companies that I watch, but being short is probably not easy until the day these things start falling apart. And I think I was short this one for a little while, and it stopped me out. And I never got back in. When I tried to get back in, there weren't shares to short at that time. And that is the real problem, that you can make a lot of money on shorts, and we have in the daily newsletter and even in the Tech Insider. it's not always as easy as just spotting a stock where the wheels are going to fall off. Pretty easy to see that happen. And I guess it was a double whammy with Fossil. And that was first, of course, that it was going to get slammed because, of course, of the iWatch. And then the iWatch can't even get anywhere close to the volume that it was they were talking about. So even as Fossil tries to make their own smartwatches, they're losing on both fronts. People not wearing the original watches and not wearing smartwatches either. And maybe a kind of a buggy whip kind of thing. People driving cars now, and maybe there's just not going to be the need for watches other than flash watches. I see all these ads all the time for Breitling and all these other watches. I've got a couple of them in the drawer, hardly everywhere. But, you know, I guess during the 1990s and 2000s, kind of very interesting. And we get to 2010, I put it on if I'm going to a big to-do, but that's about it. The chart package I have is the chart package we advertise on TFNN. This is the art of timing the trade charts. And if you can go on the front page of TFNN.com, you will see it. And there's lots of videos to explain some of the features of it. I know we get new people all the time, but this is the program that I wrote. And it incorporates a lot of the things that I wanted and a lot of the things that Tom O'Brien put together in his book. One of the specialized things that I have in it is called I can't even think today. I have to admit that I'm probably a little punchy today on more antihistamines and other things like that. But the power law vector indicator, if I always give myself about 15 seconds, it eventually comes. It's kind of like one of those machines, if you have to bang on the Coke machine to get the Coke out of it. I think my head is like that this week with the mold allergies. Anyway, the power law vector indicator puts together three of the most important things, and probably my claim to fame of adding things to this, besides some very kind of, what would you call it? Very small differences that most people do not notice. And we'll talk about those when we come back from the break. But probably the biggest one are these lines with the numbers under them. And they are a combination of price, volume, and time to give me an idea just how much energy comes in and out of a stock. But that is my power law vector indicator. Now that he thinks and can think clearly for a few minutes, probably until I have my next aneurysm. Anyway, Fossil Group down, huge volume. There's nothing. You can go back forever, pretty much, and we will, and look for these lows. But we've blown through everything back into, what is that, 2011, 2012. Maybe there's something even farther if we go back. I don't think so, though. Let's go back a little bit farther. And is there? Yeah. I mean, you broke this. Really, you're back down to $17.87, January 6th of 2009. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, crude's off just about $1. Of course, at the top of the, what is it, 1 o'clock? I think, 1 o'clock every Friday, we get the rig count. Surprisingly enough, the rig count ticked up by 2 rigs. We have 574 rigs now pumping oil around and near the U.S. and territorial waters, compared to 1,578 at this time last year. This is the first rise in 11 weeks as crude kind of gets close to its lows. And it makes me think that a lot of people may be thinking that we've got some kind of low coming in here, and or maybe they've got to start pumping more oil just to make payments. Even if they're not making money, they get some cash coming in. But kind of interesting. The other thing that I thought was interesting was there was an article out this morning by Aswath Damodian. He's around on the financial infotainment shows quite a lot. He's the NYU School of Business professor. He talks a lot about how you value companies. And again, I'm not probably the biggest guy that talks a great deal about books. I know when things are probably too good to be true. But he had the numbers out that he's done for price-earnings ratios. Thought I'd just give you a few of these before we get back into the charts. Today's the Salesforce.com. I said it's one of the most dangerous charts in all of the NASDAQ because if it cracks, I think we could see a big crack in the rest of the FANG stocks and other stocks. Right now, the price earning ratio is 126. Pioneer is 162. Netflix is 304 for its price earnings multiple. ConocoPhillips, now this one's the one that this slayed me. 476. Wow. Maybe there's something deeper in that, but hit me. And of course, Amazon at 972. That means that for every $972 you put in, you're getting $1 back. Huh. It kind of gives me a warm, fuzzy feeling to have my money overnight in a stock like that. Of course, Amazon, the debate today was he was running around many places today about the debate on whether or not you should use price earnings ratios. And the answer is always, or at least let me put it this way, Sir John Templeton said that the most dangerous words in all of investing and trading are that it's different this time. And he kind of saying that maybe this is not the greatest number to use, and he could come up for reasons why you would own Amazon. He did not actually own it. Not that he didn't come up with reasons. He just kind of figured out exactly what most people know, and that is if you have access to Microsoft Excel or even the public domain version of it, LibreOffice, so it would cost you nothing. There's a thing called a correlation, and you can put correlations as to stocks that literally fall off the top of the chart and price earnings ratios. Those with good price earnings ratios, somewhere between probably 8 and 15, normally do pretty good. And if things get bad, maybe you wake up and they're down 5%. But most of these stocks that we're seeing get absolutely slammed out here are stocks that literally have no earnings, never had earnings, were recent IPOs, these dog food companies that everybody just figured had to be something that hit the market. Just remember that the purpose of the stock market is to push out paper and make and get money for businesses. It is not there to make you rich. And there are 1,000 ways that they will try to get your cash. Most of it is banging on the drum. Anyway, I thought that was very interesting numbers today. We'll get back to the charts already in progress on most of TFNN. If I can bring them back up. Other stocks of interest to me, of course, are all these. We've talked about maybe for a year or maybe 2 years with Tom O'Brien about malls and the problems with malls. And I got to say, I wouldn't want to be long or own a mall of any kind today. I don't know how well it's doing. I wouldn't want to own that kind of residential, not residential, but retail property with the kind of earnings we've seen, especially with a lot of these mall stocks. Nordstrom, of course, down on huge volume. And if we look into this thing where it goes back to, what's that, August 31st of 2010, you've got many bumps and bridges. Let's go back just a few years. A little shorter time frame here. We've gone back to this gap. That's what I wanted to show. This gap actually had some fairly decent volume and tells you that you're probably going to find some decent support now that it's down around here. But we go back to the gap of gap up, and that happened on May 16th of 2014, happened with almost 8.4 million shares. Today, we are down, and what do we have for volume out here? 6.7 million shares today. Yesterday, of course, on the back of that, about 4.7 million shares. So continues to be problematic. Oh, I don't have the 13th on here, do I? Come on, Mr. 13. Why don't I have you there? For some reason, I'm missing the tick today. It's down 53.69. So we're even, we're back down to the lows of February 5th and on September 6th. So we've already blown through that gap and gone lower. I don't know why. Come on. Let's try this. Come on, mister. Whatever reason. Okay, other stocks of interest out here that I wanted to look at. Lululemon, another one of the big retailers. Of course, they've had problems for a while. We've seen them come back. Again, they've blown through these two gaps that came back from, October 27th is the first one. That one was up on almost 16 million shares. We go back to another gap, and that is kind of started this whole big move, and that was the December 9th, 2014 gap up with 6 million shares. Actually, we're filling at least those gaps with a lighter volume. Today, just 3.8 million shares. So some of these things are probably going to settle out for Christmas. About all the bad news are going to be into it for at least a few months. You've had your earnings. You've had all the bad news in the world. Now, will these things break and go to lower prices? Good chance these things can. In the case of Lululemon, you want to be looking at the June 13th, 2014 low at $36.26. They're going to have to start selling a lot more yoga stuff. I don't know. Okay. What else do we have out here? Cisco. Listen to Cisco's earnings last night and their earnings call. They're basically saying that next year is going to be somewhat flat. They're starting to get more competition. Of course, they've made some deals with some people over the last few weeks, and that kind of drove them up into the top of the earnings cycle. They've done nothing but go down since October 26th, and of course, not a whole lot of action over the last day and a half. But they are not guiding up, and that's probably all the market is concerned now with. But a lot of these big tech companies are very hard to play out here. We talked about my power law vector indicator number, and it is kind of where this is what I would like the scenario to play out to really set up a handful of these stocks that I think are probably topping out. Now, we talked about Cisco when it actually did test its previous high with half volume. That was the August 13th high at 29.20 with 61 million shares, and the October 26th high, $29.49. So it went above it, it closed back below it, and it did so on half the volume. It's been kind of tapering out here, kind of moving out. Volume increased just a little bit today. But what I dislike is that the energy down from the August 13th high to that August 24th low back up here was about the same. And that's on my power law vector indicator number. Now, what I would like to do is see this thing come back down. We know that there isn't a lot of volume at the top. What I'd like is this thing to come back down and start moving high with like vapor volume and take us probably into the end of the year. And then we start seeing probably what I think is setting up, which is a big move down starting in 2016. Of course, we're going to have the big numbers for and from the Fed. But I think when I looked earlier, I think it was a 67% chance of a Fed rate hike on December or whatever it is, 17th or 18th. And then the next one, if we have I think it goes to 95% by the next meeting, and I can't remember what the date is. I'll look at that during the break. But keep an eye on that. Now, I wanted to take a look at a few other stocks out here. Well, let's just go through my list that I already have put up, which is yesterday. Wanted to look at, again, we've been talking about whether housing is topped out. And a good example of that is A.O. Smith. They make water heaters and other water and plumbing supplies. Had a nice spike into the July 23rd high this year, 77.43, 1.9 million shares. We talked about the last few days about this testing it with half the volume on November 6th, and it's pulling back down. What we didn't talk about, of course, a great deal is, like I said, a lot of energy that came back and volume that came back up in this move, but it just kind of whiffs at these things as they get to the highs. And what you're probably looking for is one more pullback and one more move to the top. And that's what I think is probably going to set a high in some of these stocks. Some of them, the wheels just fall off, and there's no rhyme or reason as to why that is actually occurring. So we'll keep an eye on it. Casey General Stores, I've been watching this one. With retail not doing so well, this one was very interesting to me. It's really driven up much higher. And I guess there's a couple of thoughts, at least people that are spouting out here. It does have high light volume at the previous highs. It whiffed on its last top, September 9th, 114.90 with 750,000 shares. Came into it with 330,000 shares, so less than half the volume. This thing's pulled back down into the trading range. But the energy down and the energy back up in this last move from that September 9th high, back down to the October 1st low, back up to this November 11th high, has not been that different. And what I want to see, or what I'd like to see for a market where the wheels are going to fall off, is a pullback and then a move back higher, and just see the energy, not just the highs, but the energy between the next low and the next high really just fall out. And I can't think of a better time than Christmas, where volume's already coming out. We get a little short covering. They move these stocks back up, and kind of like a wonderful fastball right down the middle of the plate, we can make a ton of cash. In the meantime, give me a call at 877-927-6648, 877-927-6648, and let me know. You can also send an email to me, which I haven't been checking for some reason today. Probably the meds kicking in for all the rest of the stuff. So, come on. There we go. Where's it at? I knew it went somewhere. Okay, there it is. Okay, give me a email. Oh, there we go. Are we bottoming in oil? And, of course, no name and no location. So all I know is that this guy is from VText, but I do not know anything more about him. He's a disembodied voice. Are we bottoming in oil? And I think probably we are, but I think it's not today. And my guess is that we're probably looking at that $38 range. And I would love to see the thing maybe slam down as much as 35, maybe intraday, and then come back up to 38. But I think you're probably going to see that kind of move that commodities make, and that is the giant washout. And something that I love waiting for in commodities. Commodities kind of tough to trade. A lot of stuff bouncing around a great deal. I choose to wait, like I said before, for the giant, wonderful fastball down the center of the plate instead of taking a lot of singles and doubles on at least commodities. Other things we have out here, wanted to look at a few other stocks. We looked at Lulu. Panera. This thing's been kind of hammered out here, and I thought it was very interesting to watch this thing today and the last few days. We'll get to this when we do come back. I don't know. We got plenty of time today. Maybe I'll look at something else. Give me a call, 877-927-6648. Email me at path@tfnn.com and put a message in the den if you want. We're out here testing the lows for the end of the day.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And there's a little bit of everything for people out here. If you want to be short the indexes, they are going down, and volume is decent. It's still not enough for me to think that this doesn't fizzle before the end of the year and probably have a fairly decent bounce. Question is just when that bounce comes. I thought maybe this thing would start bouncing at about 2040. It's now 17, 18 points lower than that. And, of course, we're going into a Friday, so it could get ugly. We've got a lot of tax selling for a lot of these stocks that have blown up, and we're probably seeing a little bit of that. Probably going to have a little bit of tax selling all the way through the rest of November. But at some point, the volume's going to shrink, and the end of the season will happen. Shorts will cover, and there's going to be a little bit of money to be made on that side, too. But I think we probably go about a week, and maybe we get back up to 2060 or something. I'm not expecting a lot of movement to the upside, but think that we could probably, now that we're out of earnings and that there won't be a lot of news to drive stocks lower, we'll probably kind of meander around here. Stocks, a lot of shorts will cover, and the market will kind of gradually move up through next week. Not a whole lot, but a little bit, and that's probably all that matters for a lot. But volume is good. I think we've got a big downside to come in 2016. In the meantime, there are stocks bucking the trend. One of those is Panera. and the trend has been down on it for a while. PNRA. You had a beautiful gap up on volume back to April 16th of 2015. This thing has been going sideways and up since then. What it has finally done is come back and filled that gap, at least partially today. 240,000 shares compared to the 2.7 million shares. So you got to say, well, is that right? Yeah, 240,000 shares. So there's some of these stocks that are basically getting down to rock bottom level with sales. Doesn't mean that they're going to bounce tomorrow, but if you were short this, probably time to start thinking about covering. But you don't have a lot of volume out here, but there are going to be a handful of these stocks. And I actually bought some calls today in another stock that I'm looking at, where the risk reward is starting to get 5, 6, 7 to 1, and it's kind of hard to walk away from that. And there's a good possibility all these things have to do is pop a little, and those calls will probably pay off rather handsomely. I'll look at Panera over the weekend. That may be the cause here. It's kind of hard to find the stocks. There's not many of them. Like I said, I've only found one so far that I like. I'll probably be finding more stocks like that I suspect will drift higher into the end of the year now that we've had our pullback. Today's probably not the day for most of them, though, including Panera. And if you got down to about 167 back in here, that would fill most, if not all, of that gap. And maybe you'll be lucky enough to get it. The market keeps moving down a little bit. But, pretty decent James Wyckoff buy pattern. And that is buy when the thing comes back and fills the gap on light volume. But Panera is, I guess, a pretty good company. My friend thinks the devil lives there, mostly because he's a cheapskate and doesn't like expensive sandwiches. And people wanting expensive sandwiches like his kids. But he always eats at McDonald's. What can you say about that? Other than, have a wonderful weekend. I'll see you Monday. Same bat channel, same bat time. Remember to sell when you can, or cover when you can. Not when you have to. Have a good weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.